Hello everyone, and welcome back to Tomorrow's Investing, and today we're diving into the stock AMD. Starting off with the consensus of professional stock analysts on whether AMD is a sell or a buy, followed by the most important financial ratios. In our next stock analysis video of AMD, we will discuss estimations up until 2027. Please note these estimations are all done by the best global stock analysts available. If you would like to know more about the business of AMD, don't forget to check out our AMD playlist. We also want to stress that the information we're presenting today is for educational purposes only and is aimed to help you collect the relevant data to make your investment decisions, but should not be considered as investment advice. Let's dive in, starting with a broad overview whether AMD is considered a sell or a buy by professional stock analysts. For AMD, 43 analysts from global investment banks and brokerage houses have valued the stock, of which we will discuss the consensus. In this overview, the stock is valued by the analyst on a scale of 1 to 5, from either a strong buy to a strong sell. In this overview, we can see the current consensus is a buy, leaning a bit more towards a strong buy. Looking at the monthly averages, you can see the stock has caught the attention of more analysts, resulting in more buys and strong buys on the total. Let's dive into the details. When it comes to investing in stocks, understanding key financial ratios is very important. These ratios help us gauge a company's financial health and potential profitability. In this video, we'll explore some of the most important ratios that investors often consider when evaluating stocks, such as price-to-earnings ratio, price-to-book ratio, dividend yield, return on equity, debt-to-equity ratio, current ratio, earnings per share, gross margin, operating margin, and free cash flow. Let's start off with the PE ratio. The price-to-earnings ratio compares a company's stock price to its earnings per share. It indicates how much investors are willing to pay for each dollar of earnings. A lower PE ratio can suggest that a stock is undervalued, while a higher PE ratio might indicate overvaluation. Looking at AMD, it currently has a PE ratio of 109.2, which is relatively high compared to average PE ratios. On average, PE ratios for technology stocks can range from 20 to 40 or more, depending on various factors. However, during periods of strong market optimism or rapid technological advancements, PE ratios for certain technology stocks might exceed this range. At the moment, this is the case for AMD. Price-to-book ratio. The PB ratio compares a company's market value to its book value. It can help assess whether a stock is trading at a reasonable value relative to its assets. For AMD, the PB ratio is 3.17. A PB ratio below 1 could indicate that the stock is trading below its book value, potentially making it attractive to value investors. If the price-to-book ratio is above 1, it indicates that the market value of the company's stock is higher than its book value per share. On average, technology companies that are at the forefront of innovation and growth have PB ratios between 3 and 6, and in some cases, even significantly higher. In contrast, more established and mature technology companies might have PB ratios closer to or slightly above 1. It's important to note that specific PB ratios can vary widely based on the individual performance of companies within the technology industry, as well as their competitive positioning, growth prospects, and overall financial health. Moving on to dividend yield. The dividend yield measures the annual dividends paid by a company relative to its stock price. It indicates the income generated from an investment. For passive income investors, this ratio is of high importance. AMD is not paying any dividend yield at the moment. This means that all generated cash will be invested back into the company instead of paid out to their shareholders. On average, dividend yields for technology stocks range from 0.5% to 2%. The decision to pay dividends often depends on a variety of factors, including the company's growth prospects, financial health, management's priorities, and the preferences of shareholders. Some technology companies may prioritize using their cash flow for acquisitions, expansion, or internal projects rather than distributing dividends. Return on equity. Return on equity measures a company's profitability by comparing net income to shareholders' equity. It provides insights into how effectively a company is generating profits from its shareholders' investments. A consistently high ROE compared to competitors and the industry average demonstrates a company's ability to generate strong returns from shareholders' equity. For AMD, the return on equity of their last fiscal year is 4.24. On average, the return on equity of technology stocks ranges between 10 and 25%. Please note that technology stocks that are in the growth phase might reinvest a significant portion of their earnings into research, development, and expansion, which impacts their return on equity negatively. Debt-to-equity ratio. The debt-to-equity ratio compares a company's total debt to its shareholders' equity. It shows the proportion of a company's funding that comes from debt compared to equity. A lower debt-to-equity ratio, especially compared to industry peers, can indicate a company with a strong balance sheet and lower financial risk. The last fiscal year debt-to-equity ratio of AMD is 4.51. For technology stocks, the average debt-to-equity ratio ranges from 0.2 to 0.8, but these figures can vary significantly depending on the specific company's size, business model, and financial strategy. Current ratio. The current ratio divides a company's current assets by its current liabilities. It assesses a company's ability to cover short-term liabilities with its short-term assets. A current ratio above 1 shows good short-term liquidity, but excessively high ratios could suggest that the company is not efficiently using its assets. AMD's last fiscal year's current ratio is 2.36. On average, the technology stock's current ratio ranges from 1.2 to 2. Earnings per share. Earnings per share is the portion of a company's profit allocated to each outstanding share of common stock. It's a key metric for assessing profitability on a per-share basis. Consistent growth in EPS over time is generally positive, as it indicates the company is generating higher profits for shareholders. AMD's earnings per share of last fiscal year are $0.84 per share. Technology stocks have a mix of both negative and positive EPS figures. While established and profitable technology giants often report positive EPS, high-growth startups and companies investing heavily in innovation might report negative EPS as they prioritize growth over short-term profitability. Gross margin. Gross margin is the percentage of revenue that remains after subtracting the cost of goods sold. It reflects a company's ability to manage production costs. A higher gross margin compared to industry peers suggests the company can effectively manage its production costs and maintain healthy profitability. AMD's gross margin is 43.7%. Companies involved in hardware manufacturing have average gross margins that range from 20% to 40%. Operating margin. Operating margin measures a company's operating income as a percentage of its revenue. It provides insight into operational efficiency. A rising operating margin indicates improving operational efficiency and better cost management. AMD's trailing 12 months operating margin is -1.7. Companies engaged in hardware manufacturing have average operating margins that range from 5% to 15%. Free cash flow. Free cash flow represents the cash a company generates from its operations after accounting for capital expenditures. Positive and growing free cash flow is usually a positive sign, as it indicates the company is generating cash beyond what's needed for essential expenses and investments. AMD's trailing 12 months free cash flow percentage of total revenue is equal to 8.53%. Companies engaged in hardware manufacturing or other capital-intensive segments might have average free cash flow margins that range from 5% to 15%. That's it for today's video. In our next stock analysis video of AMD, we will discuss estimations up until 2027. Please note these estimations are all done by the best global stock analysts available. If you would like to know more about the business of AMD, Don't forget to check out our AMD playlist. Don't forget to like and subscribe, and see you in our next video.